64 days until Election Day, and American workers trying to figure out which presidential candidate is going to work for them. Hi, everybody. I'm Dagan McDowell in for Neil Cavuto, and this is a special Labor Day edition of Your World. The economy still sluggish, growing just over 1% in the second quarter. The job market adding new workers, but certainly not roaring back. So does Trump or Clinton have the right plan to get us back on track? To Lisa Booth and Jamu Green. Lisa, to you first. What is your biggest concern here?
Well, the biggest concern is economic growth. We've seen incredibly sluggish economic growth, as you just stated in the intro, and that's a huge problem. And a lot of that is because of the regulatory burden and a hostile environment to businesses that are going on in this country under President Obama. You look at things like Obamacare that are just hampering businesses. We're seeing for the first time in United States history more businesses going under than being created. And what does Hillary Clinton want to do? She just wants to add to that regulatory burden, add to those failed policies that are hampering economic growth and hurting American workers.
Jamu, we have had the slowest recovery from an economic downturn since 1949 at least.
Well, we certainly are leading in recovery globally, but I think when looking at the difference...
We're the tallest leprechaun in the world. That's awesome.
I think when looking at the difference between these two candidates, when you have independent analysts saying that Donald Trump's plan would literally cut 3.5 million jobs from the economy and Hillary Clinton's plan would add 10 million jobs in her first term. When Donald Trump's plan is being savaged by economists, none of the economic advisors for the last 50 years to presidents in this country will support Donald Trump. That is a serious issue to put our economy in the hands of someone who won't even show us how he has built his businesses and handled his finances, who won't show us what he's hiding.
Bernie Sanders, by the way, campaigning with Hillary Clinton today. But Lisa, to that point, I've read all of this analysis from an economist, and they factor in everything that Donald Trump has said on the campaign trail in more than a year, a lot of which, like the tariffs on imported goods from China, for example, he has backed away from.
Well, Dagan, Donald Trump's the only one that's put forward pro-growth policies, and you don't need, things like Moody's analysis for hardworking Americans to understand that they're suffering right now, and they're suffering because of President Obama's failed policies. Look, the average American has not seen a pay increase under President Obama. We see the middle class is on the decline. As I mentioned before, more small businesses going under than being created, and that's because of the regulatory burden of President Obama. As you mentioned earlier, we have the worst economic recovery since the Great Depression, and President Obama is going to go down as one of the worst presidents in terms of economic growth. And those are the same policies that Hillary Clinton is putting forward. So American workers know that they're suffering because of those policies.
Jamu, you do have to explain how if Hillary Clinton's going to do more of the same, somehow that's going to have a different result.
Look, Hillary Clinton is running. President Obama is almost done. And her plan is to invest in the infrastructure for the first time in decades. It's to rebuild and make sure that our energy grid is resilient. It is also cutting the red tape for small businesses. She's put out about 100,000 words of policy prescriptions, while Donald Trump has 9,000. And not to mention, his tax plan of today is not his tax plan of just a few months ago. That is too risky for an economy that is just now starting to bounce back.
It is.
But Dagan,
go ahead, Lisa.
But Dagan, what Jamu's talking about is the same failed policies that we saw of the stimulus. What that cost the country $4 million per job. That was not an economic recovery. That did not set the economy off strong. All it did was add to the national debt. Those are the same. It's the same tired and failed policies that we're seeing under President Obama. And the reason I mention that is because she doesn't have any new ideas. She wants to continue those same failed policies that we've already seen not work.
One of her new ideas is broadband in every household by 2020. I'm not even sure Donald Trump knows what broadband is.
She promised that because she knows that they can't execute it, Jamu. Even people who are in this business can't figure out how she's going to pay for it and how it's actually going to be executed.
Just like when we had 75% of this country not have access to electricity, we are
about the 102 million Americans that are out of the workforce?
Look at your smartphone. Every single bit of technology technology and innovation has come from public investment, and that is how technology and that's what Hillary Clinton's plan is. It's about actually recommitting to science, something that Republicans don't want to do, and understanding the government.
Republicans,
we need to go. And I hear public investment. I hear you're spending my money. That's what I hear. To move her in, Lisa Booth. Thank you so much.
Dagan.
Meantime, both candidates and all of Wall Street marking September 21st on their calendars. That's when the Federal Reserve is making its next decision on interest rates. Some at the Fed hinting a hike could be coming this month, and stocks could be in for a shock. They've been rocking so far this year, so are we in for a September surprise? Let's ask Danielle DiMartino Booth, Scott Chelledy, and Jonas Max Ferris. Scott, to you first. Do they pull the trigger in September?
Well, you know what? I hate to tell you this, but it just doesn't matter. I mean, at the end of the day, Dagan, what we just heard those two arguing about is we don't have an interest rate problem in this country. We've got a growth problem, and that problem is taxation and regulation. So go ahead, raise them a quarter if you want to raise them a quarter. But if anybody can seriously tell you that raising interest rates by 0.25% is going to have the captains of industry run out and retool their places where they do their business or buy more businesses, that's crazy. Raising interest rates isn't going to help anything. So I say this: let's do taxes. Let's do regulation. Interest rates don't mean anything right now because, as we've seen, it just doesn't work. We've got full employment or close to full employment, and we can only get a 1% GDP. The engine is broken.
Danielle, you don't think that the Fed will pull the trigger because it's political and it won't do anything to hurt Hillary Clinton?
I absolutely don't think that they'll do. The markets are at such an overvalued state that you'd have to go back to partying like it's 1999. To find a stock market and a bond market more overvalued than what they are today. And I just don't think the Fed has it in them to try and upset that apple cart in front of November the 8th. No way, no how. They've just become too political to do it. They behave more like an arm of the Democratic Party than an independent group of unelected officials who are supposed to safeguard the economy.
Well, they met, the Federal Reserve officials, Jonas, met with this group, this liberal group, Fed Up, when they ought to be speaking to all the savers in this country who've totally gotten the short end of the stick with them keeping interest rates at 0%.
Well, they didn't get the short end of the stick if they own stocks. Those have more than double. But, you know, look, rates are low globally. They don't need to go higher. There's hardly any inflation. That said, it would be kind of cool if the Fed did raise rates a little bit before the election for purely psychological reasons, which some of the other guests are kind of saying. It basically says we're not a political organization. We'll raise rates on election day if we feel that's what the economy requires and that's what inflation needs us to do to fight it. It also will say that we are more concerned about inflation than job numbers, which was a mistake they made way back in the 60s. It'd clear that. It also says to everybody the economy doesn't need training wheels. This is a strong economy. It also gives them a way to lower rates if we have another recession, which is kind of the fear now. Do we go to negative rates like they have abroad? Again, we don't need higher rates, but psychologically it would be comforting to many people, a lot of fear mongers about the Fed if we went slightly higher.
Scott, do you think it would be comforting to the market, particularly ahead of the election?
No, I don't, number one. And number two is that it's kind of like driving your car down the road and your engine starts on fire. We pull over and we check the air in the tires. That's what's happening with the Fed. That's what's happening to our economy. We're not addressing the real issue of growth. We continue to address the issue of pump things up until we're worried about taking the value out of them. That's the real problem. So he's right. I don't think they can raise interest rates because they're going to have this. All the moms and pops that have been out that risk curve that have been 90% invested in stocks are going to get hurt. So we're in a problem, and they're stuck, and there's no way out.
Danielle, I don't think anybody at the Fed would know an air pressure gauge if it hit them in the face, but final word to you.
I truly don't. And, you know, if you look back at history, and the only history that we can look back to is back to 1990 in terms of Fed statements. If you look back to 1990, the Fed has raised interest rates one time, exactly one time, within 2 months of an election, and that was when the economy was booming. I just don't see it happening.
Thank you all, Danielle, Scott, and Jonas Max Ferris. Thanks so much. Happy Labor Day. To the latest checkup.